This episode is sponsored by First Home Mortgage.
In a sense, it's 100% financing up to, we just raise or increase our loan limits to $1.5 million with no PMI. We also offer 100% financing with no PMI to attorneys as well. So when you hear about, 100% for attorneys too, it's like, what? Atlantic Union Bank is giving money.
Hello, everybody, and welcome to All Roads Lead to Real Estate. I'm your host, Matt Rhine, and today is someone that I've asked to travel a little ways. Took the train on up and is joining me to talk about a loan product for folks that I think probably don't understand fully what it even is. And certainly you are someone that I look to because you have opened up this market to me, and you've helped me educate some of our clients that are considering buying. And this is the medical professional community that, if you listen to the podcast, you might know I used to be in that world. I worked for Eli Lilly, and I did medical sales, well, really pharmaceutical sales out of college for many years. So I do serve quite a few doctors and other medical professionals and help them with their real estate needs. And so my guest today specializes in the lending aspect of this. And I'm telling you, as someone who is familiar with it, and a lot of local banks offer a similar product, I don't know anybody that does what you do.
Yeah.
And so I had to drag you up here on the train to come and actually be in studio to go over this. And so Stephanie, and I want to make sure I get your name correct. So it's Stephanie Arsale. Is that correct?
Mm-hmm.
Yes, I passed.
Great.
So Stephanie is here. She has about 20 years experience. She's a senior mortgage loan officer. And so she just knows her stuff. And I've been impressed with you at the deals that we've done together. And so first off, thank you for joining me and making the journey.
Thank you for having me. Excited to be here.
So she's here, and you've bounced around to a few companies. I think what was the previous bank that I first met you with?
At TD.
At TD.
At TD Bank. Mm-hmm.
And so TD Bank is where you were, and now where are you today?
I'm at Atlantic Union Bank.
Got it. So she's with Atlantic Union Bank, and so she's super thrilled there. So if you're listening to this and you're with the bank, she says nothing but wonderful things. And before I start digging into all the things I've prepared to have a conversation with, she did say that her department over there at the bank wants her to at least read a very short disclaimer. The world of disclaimers. We love our lawyer friends, don't we?
Yes.
Everyone loves our lawyer friends. So go ahead, Stephanie, and say your disclaimer so we don't get in trouble.
Thank you so much. Yes. This is for educational purposes only, not a commitment to lend or extend credit by Atlantic Union Bank. All loans are subject to credit approval. Other restrictions may apply. The information and data is subject to change without notice, and not all loans and products are available in all states. And Atlantic Union Bank, NMLS number 551889, is an equal housing lender and a member FDIC. And my NMLS number is 897166.
Well, there we go.
Thank you.
So we've done it. We've checked the box, everybody. Everyone's happy. We've checked the box. But all right, so that's important. Get that out of the way. And so, Stephanie, I want to recognize the fact that you are a top producer. I say that because a lot of people say they are. It's like everyone's a vice president of a bank, if you didn't know. Everyone has that designation.
Absolutely.
But you actually do it, and you've done hundreds of millions of dollars of loans for these specific medical professionals. And I'm telling you, because I'm in the trenches, not a lot of people know what we're about to discuss in terms of what the options are and who you could potentially serve. And I want to also recognize the fact that you're a top woman originator designation for Scotsman Guide, as well as a top producer for I guess the Latino community. Is that what you would say?
Yes.
So two really impressive things, I think. And so let's get down with it. So why did you start really specializing in the physician style loans, and why that of all the things?
Yeah. So back when I first started in the mortgage business, this is before the collapse, and basically if you had a pulse, you could get a mortgage. Well, that's obviously not the case today anymore. But when I first got into mortgages, there was just so many loan programs, and myself personally, I feel like I'd rather be more efficient in a smaller handful of programs than try to do everything. myself personal standards when I look to a professional for information. If I ask a question and you have to go look it up, that kind of impacts my confidence and in your, knowledge of what I'm asking for. So I just feel like specializing in something makes you more unique and able to help that specific clientele. So I looked at the entire portfolio of lending products that the bank at the time, that was Bank of America, offered. And I came across the physician loan, and I was just wowed by it. I was like, wait a second, what's the catch? This sounds like it's too good to be true. And the more I, researched it, I thought, this is incredible. This is more than just a loan. It's a benefit in my view to this specific group of clients.
Right.
And so I just did everything I could to just tell everybody, because at the time it just wasn't well known.
Right.
And I think that's where I've built my name, as a specialist, because nowadays everybody's a specialist, but
Sure.
the numbers have followed me for 20 plus years. But I just did everything in my power to get in front of, this community, to let them know, hey, make your decision, but be well informed of what's available to you specifically before you make a decision, right?
I refer to it as understand your buffet of options before you decide what you're going to eat.
Absolutely.
And I want to highlight as we get into this, because you're touching on it, but I want to make it super clear why, explain to people why people care about a physician loan, or now I want to more broadly speak, right, a medical professional loan.
Right. So the physician loan, and almost every bank now has some sort of physician loan, right? So this is why I feel like Atlantic Union Bank is a little unique, because they've intentionally broadened their offering to the clinical medical professionals. So in a sense, it's 100% financing up to, we just raise or increase our loan limits to $1.5 million with no PMI.
What is PMI? Private
mortgage insurance. So, most traditional loans, if you don't put 20% down, they have to be insured up to 80%. So these are typically loans that are sold on the secondary market to Fannie and Freddie. So most banks package these loans to be able to be sold on the secondary market.
Right.
What makes a physician loan unique is that most lenders who offer this, most banks who offer this loan, are using their own funds, their own deposits to back these loans.
Right.
Therefore, not requiring the PMI, but also that's what I think puts their money where their mouth is, right? They're literally investing in their communities because they're using their deposits to fund these. These are not, if a loan goes south, they can't just write it off or send it off to someone else. They're really putting, they're really standing.
So now explain to me why banks do that. This is a question I have. So as a physician or a medical professional, oftentimes you might have student debt. Many of them do, right? Sometimes it's quite staggering.
Yes.
What the debt could be. And so this allows someone in that, because, from my understanding, these are high income producing individuals that are very likely to, this is what I call recession proof jobs, at least for now. AI hasn't taken over everything, right?
Right.
We still need our physicians. So this is something that the banks see as a credible way to lend.
Yes.
And they want these type of folks to have accounts and to be in their ecosystem, correct?
Yes, absolutely. And, first of all, they have a very, very low to almost no default rate.
Why is that?
Well, I just don't think, I think maybe because of the profession, that it's just, it's not something that most people go back on. Right. Most people who go through the process to become a physician, it's not something that if this isn't working out for me, I'm just going to, be an artist now or do something else. They're really committed. I mean, you think about all of the schooling that goes into becoming a physician. Not only that, it's one of the, and attorneys do too. It's a profession that you take an oath in as well. Right.
Yeah.
Do no harm. So, and so I think that is the banks feel that that's a comfortable investment for them. They've invested, and so we're investing. So it's kind of like a mutual thing where they feel confident in that. And as this program, it started out with the bigger banks, and it even in that was a select group of banks. I think the reason why these guidelines are so, they keep on expanding and just, going further and deeper is because even though I can't tell you how many conversations I have with a doctor and they're like, I have a unique situation. I'm finishing my residency in this city and moving to that city. And it's unique to them because they're experiencing that, and that can feel chaotic. But literally, that's every single client that I speak to. So it's not unique, and in that sense. But we, especially myself, having had helped so many physicians move from all over the country, it helps us be able to tell them, we've got you. We understand. And, it seems crazy and it seems scary, but we're here to help you navigate this. And they're like, well, I'm not going to finish until, this date. I won't have my diploma here. I'm applying for my license. They have so many balls in the air, especially for the newer physicians transitioning, that it could be overwhelming. And on top of that, a lot of times I talk to them and it's like, oh, my wife's about to give birth. So that's just another layer to it. And they want to move to the new city, get settled in, to receive the baby and start the new job. It's just, it could be overwhelming.
Yeah. And this is such a great option. Like I said, oftentimes they can come with debt related to student debt. And a lot of us have debt these days. That's the American way. But this is a specific category where they've oftentimes been in school for a very long period of time. Yeah. And my experience with physicians in general, right, having worked with them since I was literally 21 years old, is that they're very specialized as well. And say they know their particular expertise realm exceptionally well, and then beyond that, sometimes they need help, and it can be challenging. Yes. Sometimes because they're so knowledgeable and have such strong opinions about one select area, and then to go into uncharted territory, so to speak. And so you almost have to learn how to express yourself in a way that they understand and they appreciate, and that it is unique. Until you've done it a bunch of times, it's a different type of conversation, which is why I think when someone like yourself specializes in it, they might gravitate towards you because because you already understand the rhythm of that conversation.
And I understand where they are. Yeah. We had a client that we just worked with recently, and it was really amazing because she was basically she was kind of between two worlds, right? She was going through this path that I'm very familiar with, going from being, newly graduated resident and going into her first attending job. And frankly, from a financial standpoint, she's basically going from, I'm generalizing here because everybody's different, but like, let's say $80,000, $80,000 a year income to now $250,000, $300,000. Yeah. That in itself, regardless of where you are in life, is huge. Regardless of what the debt is, it's a big step. So you're like, there's a lot of question marks floating around in the air. Sure. And so she has this path that she was, going on for herself, buying her first property and seeing what the fit was for her, for her needs in that moment. But she also had her parents in her ear saying, well, I don't know about this and about, like an arm versus a fix, because they're giving their best advice based on their experience. Right. Yeah. But, it was interesting because I would have a conversation with her. We would discuss, a plan. Then she would have a conversation with her parents and she'd call me back. And was kind of freaking out, like, oh, I don't know if an adjustable rate mortgage is right for me because my parents are, telling me that, that's very risky. And I'm like, I get that. And that's great advice as a parent. I get that, right? We're trying to, set you on a path. But we have to think about your path right now. And that's not saying anything negative about your parents. It's just that it's a different path. So you have to think about you. You're starting out. This is your first place. This is your first job. You may or may not like Baltimore, right? You may be here.
Oh, everyone loves Baltimore. We're a top 5 place to live in the world, I think. Top 5.
And even maybe just the neighborhood. Yeah. But, I said, and right now with the rate environment that we're in, this makes sense for you. Now we offer both a fix and an arm. So, you're not forced into one option or another, but this makes sense because, even if you like this place and you stay there longer, you're not committed to this loan because you can always refinance. And so, her parents had lived in the same house for 30 years.
Yeah. Yeah, I got to meet the parents, so I had some understanding as to why they said what they said. But parents always, not always, but most of the time they mean well.
Yes.
And so it's just, they add a different perspective. It's very challenging for some of our younger buyers to ever go against the advice of your parents because you have respect. Usually it's all this tied in, and then our job is the other side, the professional side. We have to cut through all of that.
Right.
And because I don't serve your parents, I serve your needs, and
Exactly.
I want to respect what they're telling you, but at the same time give you better advice.
Yes.
And in that case, the adjustable rate made sense because they saved a bunch of money. The likelihood they live there past the 7-year mark is extremely low, given their situation.
Right.
So it made sense, and we got through it. But I want to get back to physician loans at large here. So I want to reiterate, you do not need 20% or more down to be eligible for a physician loan.
Correct.
How would you compare it to a VA loan, a veteran's loan? The VA loan has been used for years by folks. It's one of the best perks, one of the nicest perks when you are, or if you had military service, if you're eligible, to be able to put nothing down, and the government insures that loan, and you can then be able to purchase a home with nothing down, right?
Correct.
So how does this compare to that program?
Well, very much similar to the VA loan. You have to qualify, right? You have to have served in order to have that benefit. Well, very similar to that is the physician loan. You have to be a physician. You have to be a licensed practicing.
Can you be in school still? Can you be in medical school?
Yes. So you have to be on that path. Right. So
what about that path? Could I be my first year? Can I be a freshman?
Yes. Starting as PGY1, first year of residency, you can go straight into medical school, out of medical school, going into your first residency, first year of residency, you qualify. Naturally, what you qualify for would be based on your income. A lot of times we have a dual, like husband and wife. And so both incomes could be used, and only one applicant has to meet the criteria. So you don't have to have dual, physicians on the application.
And so can I now use this? So it's going to be a lengthier question, but let's rattle off some people, because if you're listening to this and you're like, I'm not technically a physician, explain the specialties that this could be qualified for. And this is one of the reasons why you're on, because this is seemingly unique to you and your bank. So explain to me all the different professionals that could be eligible.
Sure. So like I said, most banks offer a physician loan, and they call it a doctor loan, physician loan. Why? Because they cater just to physicians and dentists. Where Atlantic Union Bank is unique is that, of course, we offer to doctors and dentists, but we had already been offering it to pharmacists, chiropractors, optometrists, and veterinarians. And then just recently, and I'm so proud of our leadership for looking into this and purposely making these updates to include now nurse practitioners, physician assistants, and CRNAs, because they've also made a personal and financial commitment to their community. So I'm proud to be able to offer this program to them and to show that we're standing behind our medical community.
I mean, I don't know if everyone understands how incredible that is for an opportunity for a lot of people, because yes, most physicians do have high incomes, not all. But many do.
Right.
But others in the medical community might not have as much income producing capacity in their profession. Still good, but maybe not as much. But to have this as an option where you're not paying insurance, if you're not putting down the 20%, the PMI we just discussed, to be able to waive that, get the eligibility, and be able to start the path, if you're renting, for example, if you're a young professional, to start the path of ownership is really, really empowering. Yes. And it's something that I'm, of course, passionate about. It's one of the reasons I do this silly podcast, is because I want to reach people that don't necessarily think about it. And it's one of the amazing benefits. We hear a lot of negativity about the United States these days. I feel like there's a lot of craziness that we read about and listen about every minute of the day. But one of the most amazing features is our ability to access the markets outside of the debt markets, and this is a way to get leverage and to grow your net worth. And it's certainly the way that I was first introduced to real estate as an investor. But you have to have access to capital at markets.
Right.
And this is such an incredible way to do it And there's no money out there that's cheaper than the money we're discussing now for your primary residency.
That's right.
Like to residency. Here I am talking in the medical world, but in primary, like
residence.
where you live, where you live, your primary residence. So it's just an incredible opportunity. I want to shake people and be like, hey, if you're not aware of this, become aware of it, and at least have a conversation to see what your options are.
Absolutely. And the thing is, like I said, the physician loan is very well known already because so many banks offer it. But there's this new group of individuals are now welcome to this party, if you will. And it's a huge opportunity for them because we still see CRNAs and nurse practitioners and physician assistants thinking that they have to wait and save or pay PMI. So that impacts part of their budget.
Right.
Because if you have to budget for another $150 or $200 a month in PMI, that impacts your buying power by that $200,000. That $200 payment per month means you're buying a little bit less of a house because you have to make room for the PMI payment. So this maybe allows them to buy more of something that it's not as much as a starter home. It's more of something that it can be in for a longer period of time because it's within their budget.
Even if you said, I want to spend X amount of dollars per month, all of those dollars could be going towards the purchase price of a home, maybe a nicer neighborhood, whatever. It's a better, I think, more like your money is going towards an appreciating asset that has the potential to appreciate, should I say, versus insurance.
Right.
Because that's just, insurance is necessary. It's a way of life. But if you can avoid it or reduce it, that's what you should be doing.
Absolutely.
I feel the same way about taxes. They're necessary, but I think if you listen to the tax code, it incentivizes us to follow a set of rules to minimize the amount of taxes we pay.
Absolutely.
Thank God for real estate because that does the same thing.
Yes, absolutely. And it's just as exciting as well, just to expand on the investment real estate portfolio. Another new part of the program that we've extended is we are offering all of these designations that I mentioned earlier, also the opportunity to buy a second home for as little as 5% down up to 1.5 million. So, and no PMI. So you could buy a second home with only 5% down and no PMI up to 1.5 million with the same qualifying, guidelines. So that's unheard of. Like, I don't even know.
It's pretty remarkable. Until you said it, I had never heard of that before. But, it's a great opportunity for people to consider. If you can avoid doing the PMI, I know some people are very reserved in their thought process. Well, if I can afford to put 20% down, I'm just going to wait. That's the conservative approach. If you talk to your grandma, grandpa, that's probably what they might tell you to do. How do you describe to people a different way to think about it? Because shouldn't I be putting 30% down? Why would I ever choose to put 0% down? That sounds risky.
Well, this is my point of view when I'm thinking about this myself, because at the end of the day, I'm a consumer as well, right? I'm making financial decisions for myself. But the way I look at it is you have to pay to live somewhere, even while you're saving that 20%. So you're either going to make that investment in your own property or you're going to make that investment in your landlord's property. But either way, you're paying to live somewhere. Right. So the sooner that you invest in yourself, I think the better off you'll be. So I just much rather do, and that good old saving, don't leave for tomorrow what you do today. Yeah. It applies. And again, that makes sense for everybody has a different path, but that's what makes this program unique, because it's giving this group an opportunity that most don't get. Unfortunately, we wish we could offer everybody that, but for right now, this is the designated group, and our party just is a little bit bigger. Again, outside of doctors and dentists, these other designations are now offer this. It's pretty huge, and I'm so proud of, like I said, of our leadership taking this leap and really truly investing in the community. Because when I brought this to them earlier this year, my question was simple. The last time you had a personal need and you went to the doctor, you made an appointment, whether it been a walk-in clinic or your own doctor, who did you see?
Yeah.
You saw a nurse practitioner or a physician assistant.
Yeah, most of the time.
Most of the time. And then, of course, they assess you. And then if you need, further diagnosis or, you need to go, whatever, your issue is, then you get assigned to a doctor or referred to a doctor and whatnot. But if you really think about it, these are frontline people.
Yep.
These are the people that are being coughed on and sneezed on and are dealing with the frontline illness or, whatever is availing you to come in for treatment. So why wouldn't we? I mean, these are truly very frontline people. So I think, I asked them to look at it and they said, we'll take a look at it. And they looked at the data and they're like, yeah, we agree. And I was, when they said, we're going to do this, I thought this is huge. I'm like so proud of an organization that would take, to take this step because so many of the big giant banks that have the deep pockets to be able to do it, they're like, yeah, we're not doing it.
Well, and I want to not only acknowledge that is the reality. I think that's amazing. I also think I'm a capitalist. I also hear that it's a fantastic group of individuals to get in front of and have accounts with. Right, it's a fantastic group of earning folks that have very low delinquency. So I'm a capitalist and a realist all at the same time. However, what I see and what I wanted to at least highlight is that if you have the capacity to borrow other people's money inexpensively and maintain the cash, so even if you had the cash reserves, I would encourage people to invest the cash reserves, borrow someone else's money with no additional primary mortgage insurance. And I think the dollar, if you look over, let's say 10 years, like just look at the amount of erosion our dollar is going to have over the next 10 years with inflation and everything else that's happening right now. I would rather borrow at a fixed rate from you guys at a nice, because it's not really a premium on top of a traditional mortgage. It's very comparable to a traditional rate.
Correct.
And if I have no other insurance payments attached to it, even if I had the money sitting there, as long as I could stomach the payment of borrowing the extra 10% or 20% I was going to put down, I think it's an absolute no-brainer. And then repurpose that money to other savings vehicles that outpace it. And even if you're super conservative, you could keep it in a very conservative asset class that if you needed to, you could pay down your mortgage because there's no prepayment penalties.
None.
So you could always choose to put some more down if life changes and your income goes down, or one of the, if you have a 2-person income and one of you decides not to work full time or whatever, like, right, you have the flexibility.
Right.
But
Absolutely.
You have the capacity to take advantage of it. So I would encourage everyone, if you haven't reviewed this and you're eligible, you need to review it as an option. And I hate to say it, not all banks offer this. I have local professionals. I love them. They're great. Their teams are great. Some of their products aren't as similar to yours. And so you have to be, at least I work for my actual buyers and sellers, right? I work for them. I don't work for anybody else. So I have to be aware of what's around me to make sure I produce and put this in front of the right folks.
Right.
And so I'm just a big proponent of understanding what this is as an option.
Absolutely.
For people that might not have ever thought about it. And if you're listening to this and you are a real estate agent, you need to become familiar with the different loan products because we all have our favorite people. Right? They're the ones that you might have a relationship with. And I have those too. But you also have to know the different options because sometimes you have to have it, conversations with people outside of your local market.
Yeah. And I can't tell you how many times I've spoken to an agent that's, within a lending footprint that, they have their go-to person. And I appreciate loyalty. I'm a loyal person myself, so I get it. And sometimes they'll say to me, well, my lender said that they can do an 80-20 or like a first and second and this and that. And that's nothing against that lender.
What does that mean? Because I don't want to brush that over.
Sure. It's a first and second mortgage, a combination so that you can attain 100% financing with 2 different mortgages to avoid the PMI. But a lot of times the second mortgage ends up being a higher interest rate.
Because it's a riskier loan.
It's a riskier loan.
It takes a second position in the event of a default.
Absolutely. And then also, from a financial standpoint, it's a shorter investment of time, right? So it's a kind of an in and out kind of situation. So, obviously, let's just be honest. Banks are in it to make money, and if you're going to keep a 20% loan mortgage for a shorter amount of time, they need to make income on that as well. Yeah. So to be fair, right? Yeah. Let's be honest about like why they're there. But and that's nothing against the mortgage professional that these realtors are going to with secondary options. They're giving you the best that they have. Right. And that's all, we're all trying to do that. So that doesn't necessarily mean it's bad. It's just not the best option. So it's really good to have, just be familiar with different loan programs for many different reasons. I can't tell you, I probably get as many referrals from other loan officers at other banks that offer a physician loan program as much as I get from agents and just my general marketing. Why? Because I have purposely reached out, and I pretty much know a loan officer at every bank that offers a physician loan, because even within our own banks, we have, everybody has their own guidelines, and everybody has that kind of like red line that they won't pass. We can't do this. We can't do that. And sometimes we just hit a wall. There's something, every relationship's, every client is different and has different needs and has different challenges. Sure. And so, I get calls all the time from different loan officers. Hey, I have this doctor. This is a situation. We can't do it for XYZ reason. Can you take a look at it? Yeah. And a lot of times outside of the box situations is if it doesn't fit in the within the guidelines, we'll look at it. And if it makes sense, if we can get comfortable behind certain documentation or whatever, we'll say yes when others say no. Yeah. And we won't always say yes, of course. We, it has to make sense for us as well. But and I do the same thing. In order to service your client, that doesn't always necessarily mean getting that deal. To me, servicing a client, I can't tell you how many times I said, you know what, I can't do this, but I'm going to introduce you to so-and-so at bank A, B, and C. Yeah. And they'll come back to me for the refinance, or they'll come back to me for their next home. Why? Because I did the right thing for them in the moment. And they understand and appreciate that, because the advice that I gave to them it still helped them. Yeah. And so it's amazing. And I love that. And I love that I can interact with other loan officers at other banks too, because it just shows that at the end of the day, you're working with people that really care about their clients.
Yeah, there's a few good ones out there still. They're not all, not so great. I mean, I've dealt with a few of them. We all have, but most of them are pretty solid. And so what I think is unique about what at least I've been able to deal with your company and with you specifically, it's that you typically offer rates and terms that others have a challenge to compete with. Mm-hmm. And I want to ask specifically, why do you think that is? Do you just get leaner on your spreads, that's how you can offer a rate? Or is it because you don't have to buy? Is it because you're not selling it on secondary market? Explain why other loan officers, I don't know how to say this gently, sometimes don't love it when your name's brought up because they think it's going to be challenging to compete. So why is that in reality?
Well, I mean, it could be guideline. It could be rate. It could be, sometimes it's guideline. For example, just like little nuances, for example, a lot of banks, they allow you to start to qualify for the loan with your new income within 90 days of your start date, right? And that's pretty much the standard. We allow you we qualify you based on your new income, and we allow you to close within 120 days of your start date.
That gives you more flexibility.
So it gives you more flexibility. And sometimes, when I have these conversations with people, they're like, well, I'm not ready to move until, maybe 60 days out. But, I'm flying out 4 months before. And I said, there's different things, and I always recommend for them to work with their realtor and see. But sometimes, to not miss out on the house, you may want to close 60 days early and maybe do a rent back to the existing owner, because that house that may be the one, right? And the timeline works for you. So having that flexibility to meet people's needs is part of it too. Because obviously we're all looking for the lowest rate, but and then sometimes when I get people with a challenging situation, I'm like, I could offer you 1% rate. That's not going to help you, right? Yeah. If you don't qualify at you're not going to qualify at any rate. So let's work on the challenge, and of course rate's important. I'm not just writing that off.
So there's not a specific reason in your mind why you typically are a little bit lower than others for this exact program?
I can't really say because I don't know. I don't know how other banks kind of, measure
Their price,
their price, and you have some lenders that we all kind of have this bucket, right? This allocation of funds that the bank gives per year. We're going to spend this amount of money. And sometimes some lenders fill their bucket faster. They may be done by like July. And then their rates kind of go up because they're like, hey, we're out of portfolio money for this year. We kind of have to slow it down.
Got it.
And sometimes they press the gas and pump the brakes at different times of the year. So that might be the difference. So sometimes you'll call, a lot of times people start shopping around 6 months before they're going to move. And I say, I wouldn't commit to anything just yet. Just take notes of who is the most aggressive at this point. If you're generally rate focused, and then revisit, because you may put this person on the top of the list because they had the lower rate when you call, but 6 months later, that might not be the case.
I try to encourage people, let's have a pre-approval discussion. Let's get a general budget. Let's do all this. But rates change, right? And in general, the market changes. Mm-hmm. And once you go under contract, you still are eligible to continue shopping for a period of days. Here in Maryland, it's typically 5 days. So you keep everybody honest, I say, but there's no reason to shop 30 lenders 3 months, 6 months in advance of even finding a house.
Right.
Because it all changes.
It all changes.
But we do need a framework to get a budget and create a safe search and all the rest.
Yeah. And the other thing that I would say too is that don't always let rate lead you. Yes, again, it's super important. But let's say you've called 3 banks and the bank that gave you the lowest rate took 3 days to call you back. You can't reach the guy, he won't respond to your emails. He's MIA on the weekend, all that stuff. And is that really the best option for you just because of rate? And I would talk to the lender that you feel comfortable with, that you've had the best connection with, and say, hey, listen, I really like you, but bank A, B, and C is giving me this rate. Is there anything that you can do? They may be able to match it. They may not match it dollar for dollar. They may come close, but at the end of the day, again, rate it's important, but service does too. Right. And you don't know what you need until you need it. Right. And I can tell you, I've had personal experiences with insurance claims on my house and things like that. And these .com banks, they're great. They're very responsive initially, right, to get your business. But then if you have a claim on your house and you need a check signed in person, because most of the time when you have an insurance claim, the check has to be signed by you and the lender. So getting a .com to physically sign a check sometimes.
They have their challenge,
So and you want to do business with UR. If you have, something comes up, you want to be able to walk into a branch and speak to someone face to face, especially when you're nervous, you're anxious, you're scared, you're frustrated. You just don't know. And, that has value too.
Yeah, I don't disagree. I keep the local folks honest sometimes with the national brands, but my preference, if you have 2 competing similar overall offerings, I always choose the local. That's been my preference forever. Yeah. Specifically, if I were to buy in a different market I wasn't familiar with or licensed in, which is honestly everywhere but Maryland, I would absolutely find a realtor first. I would make sure I interview them. They better have the people, and because you are leveraging their experience.
Right.
And I always say the reason why you should choose a lender that I might refer you to is simply because I have leverage in that relationship because they want more business. And so they're going to ensure, even if they're nice, I always say they're going to typically make sure to treat my people well. They want my continued business. You might have one house to buy.
Right.
Right. I'm helping a lot of people, hundreds of people over the next 2-3. You have a much greater desire to continue the relationship. And if you don't think you're going to need anything from these people, occasionally you do. Weird things happen, or the job gets postponed, or things happen and exceptions need to be made. Yeah. And so that's my PSA for that. But I want to get back to another point. We discussed attorney loans. Mm-hmm. First I've ever heard of it. So I know the physician loans, it makes sense. You're opening up the umbrella to other medical professionals. Awesome. That's an amazing opportunity for those folks. What about attorney loans? Explain how it's similar. When are you first eligible to have this discussion if you're going to, let's say, go to law school? Mm-hmm. And how long has this been around? Has this been around for a long time and I'm just unaware of it?
No. I think this is one of the things that makes Atlantic Union Bank unique, and them really showing their commitment to their local communities. So the doctor loan is very popular. A lot of people know about it. But we also offer 100% financing with no PMI to attorneys as well. They have to be practicing JDs, even if they're going into their first contract. Their contract has to, of course, state their salary and things like that. And we have to qualify them based on a base salary. But, again, freshly coming out of law school, you've been in law school. You don't have a lot of capital to start your career or to buy a home.
Sure.
So this opportunity to attorneys is huge. And then, So when you hear about 100% for attorneys too, it's like, what? Atlantic Union Bank's just giving money.
Well, to me, I have to say it, and listen, I have many attorney friends. However, I just know it's almost similar in a weird, of course, I consider them a little more sophisticated than my fellow friends that are real estate professionals, but still, it's the gap in real estate agents, for example. The top 5 or 10% of real estate agents make all the money. Mm-hmm. They are, without question, it's so top heavy. It's normally 80-20 is the rule. 20% make majority of the income. Not the case in real estate agents. It's probably the top 10%. They do the vast majority of the business. Everybody else, there's like a revolving door. 70% are not in the career roughly 3 years from now.
Wow.
And so
I didn't realize that.
It's crazy because it's very easy to get a license. It's 2 weeks in Maryland. That's why the gap between the folks that really understand what they're doing and those that are newly into the business. And I was the new person at one point too.
Sure. Everybody starts somewhere.
Everybody starts somewhere, but the knowledge gap and the resource gap and the experience gap is wide in our profession. So it's very top heavy. I assume, and maybe I'm wrong here, but the attorney gap is probably pretty large as well. Mm-hmm. I assume the top 10 or 20% of attorneys make the vast majority of the money in that business.
Yeah.
I don't know if that's true. It's my perception.
I think so. But like you said, everybody has a starting point, right? Nobody comes out of law school being the top attorney in their firm, right? Everybody starts as a junior. Everybody starts somewhere. And I go back to the same point I said before. You have to live somewhere.
Sure.
Right? You have to live somewhere. And so you're going to either be paying a mortgage or you're going to be paying rent. And the sooner you can start paying mortgage versus rent, the better.
Oh, I'm not disagreeing with the advantage for a young attorney or any attorney, quite frankly, to take advantage of this opportunity. I just think it's very bold of a lending institution to add them simply because I think most medical, like the medical community has a more clearly defined structure for typical pay ranges given certain hospitals and certain areas. Attorneys, I think, it's like the Wild Wild West still. I think the gap is massive all over the place.
Yeah.
Super high income, super average income, it could be anywhere.
Yeah.
And so that's what I think it's pretty incredible. It's to have that opportunity opened up to them in general is really great. Mm-hmm. I don't see anybody doing that for realtors. And mark my word,
yeah, I know, right?
I will eat this piece of paper if someone offers us that.
I sit here and write loans all day long for people at 100% financing, and I still have to put 20%.
Well, you're 100% commission, so they're not giving us any. In fact, I had bought investment property last year, and I had to document every single piece of income I had all year. Mm-hmm. And I'm like, that's called realtor commission. Well, it's not structured. It's not I said, of course it's not structured. It's when settlements happen.
Right.
And this is a lender, a local, like it blew my mind that I had to justify my entire existence.
Right.
And it was horrible. No offense. That's always the toughest part. It's like.
Yeah. Self-employment. And real estate falls under that, right? Because anytime you don't have just a base salary, like
Correct.
XYZ guaranteed this time, everything has to be, because they look at the ups and the downs.
Oh,
especially now after coming out of COVID. Yeah. Everybody was sidelined. And even some doctors, they were still on salary, thankfully.
Yeah.
But, a plastic surgeon didn't get priority over an emergency physician. So judges, it was kind of eye-opening to see how interesting you could be. And this is when I have the conversation of 30 versus 15 with people. Sometimes people want to get a 15-year mortgage, and they're weighing the pros and the cons between a 30 and a 15. And I said, like, listen, I'm a huge fan of paying off your debt as soon as possible, but let's look at both. And I like breaking down the 30 versus a 15 because you could pay down your 30-year mortgage in 15 years.
Sure.
Right. You can, and I think you beat the bank at their game in the sense that you're making direct principal payments versus, I use the cone theory, most of the time you're paying mostly interest up front. So, but doing a 30 versus a 15 with a 15 schedule, you'll get to the same place, but you'll have the flexibility. So if you decide over the summer that you want to spend 10 grand to go, on a cruise or something, you don't have to readjust your whole salary. Right. I mean, your finances, you could just take a break from that extra payment, You
could. And I'll tell you, as an investor, as someone who has to go to you banks for approval sometimes to buy the next thing, I like to know that the flexibility, you only hold against us whatever the minimum commitment is.
Right.
So if a 30-year mortgage is substantially less expensive as a required payment each month, you can qualify me on the 30-year payment, as opposed to if I lock in at the 15 and next year I want to buy another property, you now have to hold me to the standard. Even though I've made the same payment, for example, I could pay extra every month.
Right.
You don't hold me to that standard. You only hold me to the minimum.
Right.
Which is a really nice piece of flexibility if you intend to explore your opportunities financially.
Yeah. And you could be just as aggressive, with your payments and things like that. And you're making direct principal payments versus principal and interest payments on an amortization schedule. So I personally like the 30-year better and amortize it over 15. Does it end up dollar for dollar the same at the end? No. But you also have to account for the flexibility.
Yeah.
Of having that option.
Yeah. And so now that I have you, you're not from our local market. I would have to ask you, that's the number one question. You go to a cocktail party or a dinner party, anybody you don't see all the time, but they can't help, right? We all talk about, what do you do for a living, blah, blah, blah. They all want to know, how's the market?
Right.
And so as someone who's not local to the Baltimore metro market here, how do you perceive the market to be doing? I know you specialize in a group of individuals that have very high job security typically, but how do you feel? How would you answer that if you were out and about tonight and you bumped into somebody?
How do I feel about
the market? The
market
general question everyone loves to give us.
I think right now every market is impacted with everything that's going on, the challenges. And some markets are a little bit softer in the sense that properties stay on the
And we're recording this essentially the last week of May 2026.
Yes.
So go ahead. I want to preface.
The summer markets are going to be more competitive than the winter markets. Some markets are just a lot more competitive.
Are you seeing multiple offers standard? Are you seeing very competitive bids, or has it slowed down at all?
In some markets, it's still very competitive. I had a conversation with a client that the property that they were interested in went $300,000 over asking, and they're like, "Yeah, we're not doing that." So there's just some markets that are crazy competitive, and there's other. Right now, every market's competitive. It's just that some markets are better than, you're more aggressive than others, and to that, I bring up another advantage that Atlantic Union Bank offers, and we offer two options. You can either get pre-qualified. And that's basically where you fill out your loan application and we look at your credit. We look at, like I myself look at your financials and give you my best, advice based on 20 plus years of experience and knowing what will work and what won't. And that, that's fine. That'll work because, I'm not going to send you out there to shop if I don't have confidence in your ability to qualify for this. But then we also offer one step further to get you fully pre-approved, which means you're going to submit all of your documentation. It's going to go in front of an underwriter, and the underwriter is going to say, yes, we back this loan. So by doing that, now you have a full certified pre-approval. When you go out in the market and put an offer in, you can close as quickly as 10 days, 10, 15 business days. Even though we could close in 10, I always say it's probably best to ask for 15 just because you just never know what you don't know, right? And if, I would say on or before, so we can close faster, we will. But I think that gives a competitive edge because now if you're going up against 3 or 4 other offers that need to close in 30 or 45 days and you're coming in at 10, you can all be offering the same dollar amount, but just right off the top, you're more competitive.
It's a point of differentiation. Now, because your average client is probably very educated and certainly knows at least their profession very well, do you get a lot of pushback in that regard? Is that something where people go, I didn't find the house yet. I'm not doing that. I'm not giving you all my stuff. I'm waiting until I find the house. Do you still get that same pushback?
No, I don't as much. And if I do feel like it's leaning in that direction, I ask them, have you spoken to your agent? What does your agent recommend? Because I'm very thoughtful to make sure that that the agent's part of the conversation as well, because at the end of the day, we're all working for the same goal. Yes. And we need to work together to get you to where you need to be. Because sometimes, let's be honest, a lot of times right out of med school, they don't have a lot of money to put down. Yeah. So where we allow for the seller to contribute up to 3% of the sales price in seller concessions to cover your closing costs, that can be huge. And it could be everything you need for this to actually work.
Right.
So a lot of times I'll hear from an agent, my agent said that there's just no way I'm getting closing costs in this market. And I'm like, well, let's have a conversation about that, because my advice is always like, you know what, let's not even talk about closing cost assistance up front. Let's talk numbers first.
Sure.
And get them agree to a number and then back into.
Well, and in Maryland, if they're starting this journey, they're younger, right out of school, there are grant options. There are other options they could be eligible for, not just standard seller credit. So, but I think it's so important to have this whole conversation in advance. And I love to tell the medical folks that I still help, because it's still a large portion of my business, especially it's like anything else. The earlier I can get them in their career and in their life, the larger the impact could technically be. I could still help someone in their 60s create wealth. It's a lot easier to help them in their 20s. And then in their 30s, it just is. We have more time, right? The value of the power of time and compound interest is just remarkable. And virtually, I don't care what your income is as a professional in the medical community, I can outpace you in real estate. Anybody can, with very limited knowledge. It's not a joke, it's the truth. You can get more passive income in real estate than you will ever earn from someone else paying you a salary 99% of the time.
Yeah.
And so I think you have such a distinct advantage because you have a high income. People are basically giving you the cheapest form of money they could possibly offer you, given your status of your day job or your evening job, however that works. But it's just like, God, I want to just make sure they understand the value of that opportunity. And you could have choices in 10 or 15, 20 years when you're still young.
Yes.
That nobody has access to because of the decision you made and the career choice you made. But you have to create that lever early as you can, as soon as you're aware of it, right? That's the old adage, when's the best time to plant a tree? 20 years ago?
Exactly.
Next best time is today.
Yes.
So it's just such an opportunity that you have. And I'm so passionate about it because I could help anybody early enough to develop not just wealth for themselves, but generational wealth.
Sure.
But if you can start that path with the opportunity like your bank can offer, holy smokes, because you can leverage this and move again, continue to own the previous asset, rent it out. You have to do it with purpose and buy in the right spots. But boy, you can do this multiple times and you can create all this income stream so effectively with minimal risk, minimum tax implications. It's crazy. It's just like something I wish more and more people had the access to. And now attorneys even have access to it when they're...
And it's a financial investor, a financial advisor is a really good person to leverage in this circle as well, because let's say you have the 5 or 10% to put down, right? At that point, it's an option. What makes more sense for this extra $50,000, let's say? Does it make more sense for me to put it down and save 0.1% in interest because I'm financing less? Or would that money be better served starting my retirement account in my early 30s, right? And letting that money grow over time. So that's a really perfect segment to have a conversation with a financial advisor, because that money could turn, $50,000 could be $1 million by the time you go to retire, which, because it keeps on compounding, like you said. Yeah. So this also gives us an opportunity to, between a loan officer and a real estate agent like yourself, and then bring a financial advisor into the mix, because then we're really helping you not, putting all the choices in front of you and seeing, not just what's a good decision today, but for the future. Had you only invested that $10,000 in, a retirement account now versus, putting, you were thinking you're saving $100 a month.
Yeah. Yeah,
You
it's
know?
just, I think everyone's financial education is relatively low. I've complained endless amounts of times on this podcast about how I have a degree in finance, and I think my financial education was pathetic relative to what it should have been after graduation. And it's just being educated on this. I think we all know how much an iPhone costs or how much those sunglasses that everyone likes. That we all have, as consumers, know a lot about value when it comes to being a consumer. But we are woefully ignorant when it comes time to make financial decisions. And as a the whole point of this particular episode is helping people that are high income earners or have the potential for high income to make choices as early as they can to give themselves maximum opportunities later to make decisions and to have the life. Because the physicians I've helped over the years, some of them get into it, spend all these years, and then ultimately decide they want to do something else at some other point. Because it's a grind, it can be tough, right? And sometimes the passion can eventually wane, right? So you want options, and that's the key. I think that, to me, is the ultimate deciding factor of why I pursue wealth. I want options. I'm not someone who's going to sit on the couch all day and stare at the wall. My wife would kill me, right? It's like I got to be busy, but I like to choose what I do.
Right.
And I'm so grateful I still do something every day I choose to do. Even if I was independently wealthy tomorrow, I'd still do this.
Right.
But I want the option to say, I'm all done, or I want to change, or I want to do, I coach my kids in all their sports, and I love doing that, but it's because I've worked my tail off to have options. No one dictates my time except for me.
Yeah.
And that's a powerful statement that I think more people wish they could say.
Yeah.
And what we're offering and discussing today is one of the ways to develop that and to have more funds, for example, to invest, to start the journey, to have the decision of your own time.
Yeah. Yeah.
So it's pretty incredible, the stuff we talk about, in my opinion, as the opportunities that exist. And we're unique. I don't think, are there other countries that offer anything like this?
I don't know of any. No.
To my knowledge, there is not.
No.
Because the lending markets, we talked about some of the other markets, especially some of the Spanish-speaking countries, right? I just spoke to someone about this, I think, on a recent podcast, and we just discussed how they are used to saving up all the money to buy the house. It's not, the lending system doesn't work this way.
No.
And certainly 100% financing would completely blow their mind.
That doesn't exist.
Yeah.
That does. I mean, outside of the VA loan, it doesn't exist. And there's, a lot of times you have agents, especially newer agents, that come in and they're like 100% financing, and automatically there's a stigma attached. Oh, they don't qualify. They're borderline. There must be a catch. Something's wrong. They might not be a strong buyer.
Sure.
And so I always say, please reach out and speak to the lender, because just because they choose to exercise an option, a huge benefit to them does not make them a weak buyer by any stretch. Right. Because if you think about it, in my view, it makes them a stronger buyer. That a bank's willing to give them like all of this for nothing. I mean, for a little down payment.
To me, it's very strong. I like the pre-approvals that state where it is. It's physician loan. It speaks to the capacity of your buyer in terms of their profession. I think it's a very smart thing, and it doesn't have the stigma necessarily. Unfortunately, with VA inspections during the loan process, they have an appraisal, and oftentimes they're pretty strict.
Yeah.
And so that's, if you're given 2 or 3 options, one's a VA, some sellers take that into consideration because, that's kind of makes me nervous.
Right. Because they have much more stringent appraisals.
Yes.
There are certain fees that, you may or may not have to pay in addition to, all the other things. So those are the things to weigh as well. But at the same time, you're giving a veteran, you know. So I mean, there's checks and balances with everything, but outside of the VA loan, there isn't a lot at 100% financing, especially in this price range, right? There's a lot of first-time home buyer programs.
It's up to $1.5 million.
1.5 million.
That's crazy.
Yeah, and
even for a second home.
Yeah. Well, a second home, it's 5% down to up to 1.5 million.
Got it.
Which again, it's huge. And the number one question I get is, well, what if I want to rent it out? Okay, so second home, you have to occupy it as your primary, you have to occupy it for at least 2 weeks out of the year for your personal use. So yes, that's going to be okay for you to Airbnb this bad boy. but we really want you to use it for yourself. I personally have a second home in Florida, and we probably use it more than 2 weeks a year, but because it's our second home, and we go and we have our traditions. We spend Christmas at the beach, and it's really nice to have that, be able to create those traditions as well, and still make some income to help offset it. But yes.
Well, I think we've done a good job. I've ran my mouth for an hour with you. I can't believe we spent that much time talking about this, but I was passionate about it, and I'm so grateful that you took the time to come up here to good old Baltimore to at least go over this in greater detail. I'm hoping, right, that people understand and can appreciate the number of folks that are able to, the specialties that are eligible for this, start to learn about it as another option. Even if you're not looking to move tomorrow, wouldn't it be nice to know what this is? Or if you have a loved one that's in this medical profession that might not know,
Yes.
and to have this conversation, and then you can have it in your back pocket when it is time.
Absolutely. And I think just because of the additional designations, you have these people in your sphere, right? Everybody either has a friend or a family member or a colleague that is a nurse practitioner, a physician assistant, or a CRNA. So you may, like the 7 degrees of Kevin Bacon, you probably have 3 degrees of somebody in this other designation.
Yeah.
And, just let them know about it, because again, it's just another option that they can weigh when the time's right for them.
That's right. Well, I'm going to end it on that. So once again, thank you so much, Stephanie, for joining. I'll make sure to have all your information so folks can reach out to you. And you do serve which state specifically? I don't want to broadcast it without.
Sure. We serve Indiana,
Okay,
Pennsylvania, Delaware, Maryland, Virginia, DC, North Carolina, South Carolina, Georgia, West Virginia, and Tennessee.
Well, there we go.
Hopefully I didn't forget any states.
That's a pretty good list there.
Yeah, it's 11 states.
11 states. Check it out. So, all right. Well, once again, thank you once again for joining me, and all your information will be online. Till next time, everybody.
Thanks.
And big thank you to our sponsor, First Home Mortgage. You can check them out at firsthome.com.